Hi there, welcome to Kneppy Invest. Bit of an update for a company called BWX, a company I have owned in the past. And typically, when I do own B or have owned BWX in the past, it was just usually a short or medium term trade because this company is definitely not high quality, not the sort of company you want to own in your portfolio for the long time. And that's fairly obvious in hindsight right now because this company has gone into voluntary administration. Now, voluntary administration does not necessarily mean that's it for this company. They could come out of this period of time as possibly a better company. However, in saying that, more than likely, shareholders of this company will be highly diluted. Now, I would definitely prefer a company that I do own to go into voluntary administration compared to receivership because voluntary administration is usually initiated voluntarily by the directors of a company. If a company you own went into receivership, that's bad news because typically in receivership, a receiver is appointed by an outside entity. Usually, that entity has some loans that that company needs to pay back, and they're not confident that company can pay them back. So let's talk about why BWX went into voluntary administration. Could we have seen the signs? And there was plenty of signs leading up to this announcement released by BWX on the evening of April the 3rd that they have gone into voluntary administration. And those signs were quite obvious. In fact, those signs have been increasing over the past few months. In fact, the first signs was if you just look at the chart and the downtrend of this company's share price. This is the second BWX video I've done. The first one was on the 28th of June 2022. After company did an absolutely horrific capital raising. I think at the time, share price was something like above $1, and this particular capital raising was 40% discount to the share price. So like at 60 cents. And I absolutely hate these types of capital raisings. Share price before this in the previous year had fallen from something like $6 all the way down to $1. The chart looked absolutely horrible. And then they did this horrific, horrible capital raising at 60 cents. And then from this point up until they went to voluntary administration, the share price dropped even further from 60 cents to 20 cents. So it's just been a horrible few years for BWX. And we'll talk about why it's been a horrible few years for this company. Now, the tale of woe for BWX really starts with acquisitions. And there are two ways a company can really go into voluntary administration, go bankrupt. And that is really through debt, too much debt. And one of the reasons they get into too much debt is through bad acquisitions. And history has shown, even though if you do read a presentation after a company makes an acquisition, they're really optimistic. So the management are really optimistic, really positive about the acquisition. They'll talk about synergies, how it's value accretive, almost instantaneously value accretive for shareholders. But history and research has shown us, and research has been done on this, that many and most acquisitions are not beneficial for the company and shareholders. In fact, one of the research papers I did read, something like 57 or 59% of acquisitions turned out to be bad for shareholders. And that was particularly true for larger companies. So you always have to be wary when a company keeps on making acquisitions. Now, BWX has made 4 acquisitions since they listed on the ASX back in 2016. The first one was in 2017 of Mineral Fusion. They bought that company for about 38.4 million. Then they bought Andalou in 2018 for, it says here 900,000. Then Flora and Fauna, provider of e-commerce support services, for 27 million in May 2021. And the last one was Go2 for 89 million. Now, that wasn't complete acquisition of a company because I think it was only like a 50.1% stake in Go2, and that was for $89 million. And a lot of times when they've made these acquisitions, they've gone into debt to make the acquisition, and they've also raised capital, diluting shareholders. And I did have a read at a few of the presentations when they made these acquisitions, and again, management were positive. They were optimistic that these acquisitions were going to be beneficial for the company and the shareholders in the long term. And as it turns out, they were not. Now onto the balance sheet, determining the health of this company. BWX, this is their balance sheet At the half-year financial statements for financial year 23, they released this towards the end of January 2023. There are a few things I'm looking at here. Determine the health of a company. So some things I'm looking at are comparing total current assets to total current liabilities. So if you do subtract total current liabilities from total current assets, you get working capital. And ideally, you want working capital to be positive and increasing. And total working capital or working capital for this company has actually decreased from last year to this year. So last year, their working capital, total current assets minus total current liabilities was 32 million. Now it's down to 14 million. But that's a little bit deceptive. And I'll talk about why that's deceptive, that 14 million, later in the video. The other thing I'm looking at here is liabilities, in particular loans. So financial liabilities, current liabilities, 45.9 million. Total non-current liabilities, 55.1 million. So this company has significant liabilities in the way of debt. So again, debt is the major killer of companies all around the world. So that's one of the major things I do look at when I am looking at the balance sheet for all companies. I prefer my companies that I invest in to have as low as debt as possible. Does not mean no debt is ideal. Some companies, can have debt, but you don't want too much debt. You don't want debt that a company can't pay off in the future. And that has been BWX's problem over the past few years. And I'll talk about that later in the video as well. Now, the story doesn't finish at their balance sheet or their financial statements. I always love to go through the notes of a company that follow the financial statements because the notes always have some nuggets of really good information. And if you go to note 2, which can at times be a very important note, you'll get a statement from the auditors. And this is a very important statement, an absolutely red flag of a statement from the auditors. For the reasons described below, there is material uncertainty whether the group, BWX, will continue as a going concern. If I was a shareholder of the company and I saw this statement, I would be selling my shares almost immediately. So let's go through some of these reasons that are described within the notes section of this financial statements. The first one is the group made a loss for the half year of $100.8 million. And as at 31st of December 2022, its current assets exceed current liabilities by 14.2 million. That's at working capital, noting that the group had an unconditional waiver from its financiers, CBA, in respect of the suspension of a covenant testing as at that date. If they didn't suspend that covenant testing, the working capital of this company would have been negative $40.8 million instead of positive $14.2 million. Now, the second reason, the group expects to return a profit in the 6 months ending 30th of June 2023 and to turn around the significant short-term deterioration in its working capital position. Again, this company has seen a significant deterioration in its working capital, which is current assets minus current liabilities. If they didn't get this unconditional waiver from CBA, that would have been negative $40 million. And they go through a number of other reasons why there is material uncertainty about the going concern of this company. I'll let you read that if you want to. But these are significant red flags about the future of BWX. So I highly recommend whenever you go through a financial statement of a company, look at the notes. Look at note 2 because it can have some absolutely amazing nuggets of information within it. Now we get into another really important note. This is note 12, found on page 22 of their financial report. This is borrowings, again, debt. The biggest killer of all companies around the world through history. Always pay attention to a company's debt. Now, the couple of main things here. The first one is on 16th December 2022, the group increased its loan facilities by $10.5 million. So they increased the debt by that amount because they had to fund their operations because they were burning through a lot of cash. We'll actually have a look at their Appendix 4C that they released at the end of January. I've already mentioned they released their financial report, half-year report at the end of January. It's actually at the end of February. They released their Appendix 4C at the end of January. And I'll show you some red flags in their Appendix 4C later in the video, particularly around how they had to increase their debt. Now, the next most important thing here is if that covenant had not been waived, I've already mentioned this in the previous slide, $55.1 million would have been classified as current. Hence, their working capital was actually worse than $14.8 million. It was actually negative $40 million. And that's a significant red flag in itself. It therefore did not have any impact on the entity's exposure to foreign exchange and cash flow interest rate risk. The next most important thing here is the next paragraph. Effective on the 1st of February 2023, CBA agreed to continue waive compliance with financial covenant reporting obligations until the 28th of February 2023. And then on the 24th of February 2023, the group were advised of its financier intention to continue to waive compliance with financial covenant reporting obligations until 31st of March 2023. That's a very important date. Would CBA again be willing to waive these financial covenants? And I think the answer has been a resounding no. And then just below that, Note 2B outlines the basis of appropriation, blah, 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 including the material uncertainty that exists regarding the group's funding. So this all comes back to the group's funding, comes back to their debt as well. And this is a reason why this company has gone to voluntary administration, because of their debt. Now let's go back to the end of January when the company released their Appendix 4C. Now this company hasn't traditionally released Appendix 4Cs. They must have been asked by the ASX to start issuing these quarterly cash flow reports because there were some concerns about this company. So when I did have a look at BWX's Appendix 4C or the quarterly cash flow report, there were some significant red flags here. They were so obvious. The first red flag comes through in their cash flows from operating activities. Receipts to customers, nice at $51.9 million, but this company spends a lot of money. $33 million on product manufacturing and operating costs, $10.1 million on staff costs, $8.3 million on advertising and marketing. Even though they have decreased that, they're still burning through a lot of cash. In fact, in this particular quarter, they burned through $9.2 million in their operations, just their operations. In the first 6 months of the financial year, they burned through $31 million of cash. And I think this is one of the reasons why CBA became a little bit nervous about BWX and why they probably weren't willing to waive these financial covenants anymore when it came to the end of March. And the second red flag can be found in the cash flows from financing activities, Section 3 of the Appendix 4C, and it's just around their debt. Proceeds from borrowings, $38.8 million in the first 6 months of the year. Now, repayments of borrowings, $23.1 million. So overall, this company increased their debt by $15.6 million in the first 6 months, by $10.7 million in the last 3 months. And the reason they had to increase their debt was to maintain their operation. This is not a very successful business model for the future success of any company in the world through history. Another very important section of the Appendix 4C is Section 7, and here is Section 7.6. The reason Section 7 is very important because it goes into detail about the debts of a company. So every single time I read an Appendix 4C from a small cap company, I always look at Section 7. I want to know if a company has any debt. So this goes into the details of the financing facilities for BWX, and the lender for this company is CBA, and the most important one here is Facility C, with interest rate of 5.5%, maturity date the 28th of February 2023, facility limit $47.1 million, drawn $46.7 million. So maturity date of that facility was the 28th of February 2023. And the total debt for this company at the end of December 2022 was $105.3 million. That's way too high for this type of company. Towards the end of March, the company went into a trading halt, and typically trading halts last or should last for about 3 days. And if the reasons why the company went into trading halt haven't been resolved after 3 days, the company will go into a voluntary suspension, and that's what happened with BWX on the 24th of March 2023. And the reason they went into a voluntary suspension is because the company wanted to procure additional debt, and that's interesting wording, and or equity funding, or replace its existing debt funding with CBA. This will allow the company to execute its restructuring plans, address its rundown of inventory, and continue the sale of its major non-core assets in a timely manner. So that's some of the acquisitions they have made in the past. So obviously right now they realize these acquisitions they have made in the past were not good acquisitions, particularly because more than likely if they do sell them, it's going to be to a discount to what they bought those assets. The company has a waiver of certain covenants under its facility agreement with CBA until the 31st of March 2023, but it does not have material certainty whether this waiver would be extended after this period. And we obviously know now that CBA went, no, we're not going to waive these covenants anymore. Discussions are underway between the company, its lender, and various parties who may provide additional debt and or equity funding or replace its existing debt funding. So we now know what happened with CBA, or the relationship between CBA and BWX. Obviously, CBA was a little bit nervous whether BWX can pay their debt back because this company is still burning through a lot of cash. And here is the voluntary administration announcement released by BWX on the 3rd of April 2023. A couple of interesting things here. The operations of BWX outside of Australia and the go-to business that they acquired about 1 year ago, or just over 1 year ago, are not included in the administration. A range of issues have continued to impact the Australian operations of BWX, including customer destocking and inventory and working capital issues. So again, working capital issues, which I've talked about during this video, necessitating the director's decision to appoint administrators. The directors believe entering voluntary administration will help progress the restructuring process already underway with new management at BWX, blah, blah, blah. And a very important little comment here. The directors will work with the administrators to ensure a positive outcome in the administration with employees and customers remaining a top priority. Employees, customers, not shareholders. To be fair with you, if you are a shareholder, the administration or the administrators don't care about you at all, and more than likely you are going to be hurt by this voluntary administration. More than likely your shares are going to be highly diluted. Now, it does not mean with the company going to voluntary administration that that's it for this company. I have seen plenty of times a company goes into voluntary administration and the company, maybe a year after, comes out of the voluntary administration, but your shares will be highly diluted. So more than likely that will happen. And really interesting at the bottom of this, the directors have been actively working to find a compatible buyer for BWX's 50.1% shareholding in GoTo. So obviously, even though they bought that GoTo, that 50.1% holding in GoTo 1 year ago, that was a mistake, and they want to sell that to bring some cash into the business to pay back some of their debt. Now, the positive things, they went to voluntary administration. They did not go into receivership. For those who don't know, so receivership, there's a little bit of a difference between voluntary administration and receivership, because a voluntary administration is initiated voluntarily, in the word, by the directors of a company. Now, receivership is appointed by an outside entity. So you don't want to go into receivership. If you had a choice, voluntary administration is a little bit better than receivership. So at least this wasn't not receivership. And if they did go into receivership, this would have been appointed by CBA, because CBA is not really sure, not certain. In fact, they're probably more than certain that BWX would not be able to pay their debt back. Now let's have a look at some really obvious red flags in regards to BWX that really started triggering about 1 year ago. So this is the history, operating cash flow history, and free cash flow history going all the way back to when the company listed on the ASX. And to be fair with you, this company hasn't really created a lot of cash flow in the operations. Their best half year, so these are the half year numbers, the best half year was the first half or the second half of financial year 20. So that's from the 1st of January 2020 to the 30th of June 2020, where they actually did produce $18.8 million in operating cash flow and about $16 million in free cash flow. But everything has been falling off a cliff since then. In particular, the last 3 quarters. This company has been burning through a lot of cash, and it's been getting worse each successive half year. So this is an absolutely damning graph when you look at the operating cash flow and the free cash flow of this business over the last 3 half years. And even though this does seem a little bit busy, this is just looking at the total current assets, total current liabilities, and cash and equivalents. And the main thing to note here is total current assets have been dropping over the past three halves, while total current liabilities have been rising over the last three halves. So the working capital of this company has dropped from about 76 million 3.5 years ago to 14 million this half year. And that is only 14 million because of that waiving of that financial covenant. And in fact, if that covenant wasn't waived, this company would have been negative $40 million when it comes to working capital, not positive $14 million. The other thing to note here, cash on hand has been dropping over the last 4 or even 5 half years from $77.8 million to $14.4 million. So significant red flags when we look at the financial state of this company over the last 3.5 years. Now, by looking at the financial statements of this company, it's pretty obvious there were some red flags over the past 3.5 years, particularly through or in the way of how this company was burning through a lot of cash. Now, the market is said to be forward-looking. So if the market is forward-looking and the market came to the opinion that there were some red flags or potential red flags in the future for BWX, can we see that play out in the chart? So this is the 2-year daily chart for BWX. So 2 years ago, in the middle of 2021, the share price of this company was as high as $5.50. And the start of this period, between April 2021 and around August 2021, the share price was consolidating, going sideways. So there was no sign that the market was a little bit wary, a little bit skeptical about this company. And then the sentiment and the trend of the share price started to shift gradually from positive or neutral to negative. It wasn't a sudden change. And this is something a lot of people who don't believe in technical analysis, don't believe in sentiment, they don't realize that sometimes the trend of a share price and the sentiment in a company can gradually change. Sometimes it happens at an instant because of news flow, but sometimes it gradually changes. And this is definitely true for BWX in the middle of 2021. You can see the share price going from a sort of a consolidation period into a downtrend in the later half of 2021. Share price started to move down at a pretty consistent rate. So definitely there was a trend change during, say, August, September of 2021. I don't listen to those who say you can't determine when the trend changed. I heard this just the other day in a podcast. I think it was a Motley Fool Money podcast with Scott Phillips and Andrew Page. And I won't say anything else about those two experts, particularly when it comes to technical analysis. When it comes to technical analysis, they should say nothing because they don't understand anything when it comes to technical analysis. And if you just have a listen to that particular podcast, they are quite naive and ignorant when it comes to very simple things like trend changes and sentiment. In fact, they were asked a question, how do you determine the sentiment? And they said it's impossible. It's not impossible. Charts determine sentiment. Just by looking at this simple BWX chart, you can see the sentiment in this company shifting from positive or neutral to negative. It's easy to determine the sentiment by looking at charts. So anyway, rant over. You can see that the market started becoming wary around BWX in the latter half of 2021. And then the bad news flow started to come in the start of 2022. You can know, without even going through the announcements, that this company released a really negative announcement in January 2022, another negative announcement in February 2022, another negative announcement in May 2022, another negative announcement in June 2022, another negative announcement in December 2022. So that's 5 negative announcements in calendar year 2022. And that's why the share price dropped from around about $4, $4.50 before the first negative announcement, all the way down to 20 cents. You can look at charts and determine the sentiment of the company and realize that the market is forward-looking. The market saw potential problems in this business before the company declared those problems. So again, charts, technical analysis can work. So don't listen to those experts who say technical analysis is absolute rubbish. So even though I did go on to this massive rant in regards to, was it massive or not? Who knows? even though I did go into this rant in relation to Scott Phillips and Andrew Page, I actually do respect both these gentlemen quite highly, which is why I listen to their podcast quite routinely. But I always scowl when I see or I know they're going to bring up technical analysis or charting, because both Scott Phillips and Andrew Page are quite naive and ignorant when it comes to this side of investing, when it comes to charting and technical analysis. And when you're not an expert on something, it's best to not mention how bad it is, because you don't know. It is really obvious. You don't understand, or they don't understand technical analysis. They don't understand charting. And that's all I'm going to say about it. So it's best, if you do hear either of these gentlemen talking about charting or technical analysis, just ignore what they say and listen to everything else they say. Just ignore any comment they have in regards to technical analysis or charting. Anyway, this is it for BWX and this video on voluntary administration. If you are a long-suffering shareholder of this company, I'd love to hear from you. And I'd love to hear why you maintain a holding in this company, even though the share price was plummeting, even though this company kept issuing really bad announcements to the market, particularly during 2022. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.